So it's time, exactly 15:45 as agreed, and thank you so much for coming back. We are now moving to the next session, which is going to be moderated by Aude Fanold, who is a water policy analyst at the OECD Environment Directorate. Happy to see you. And all our panelists who are going to be introduced by Audrey. And with this, I say, can we please give them a warm welcome? Audrey, over to you.
Hello. Yes, it's working. Thank you very much, Mr. MC. Good afternoon, everyone, and welcome to the fourth session of the 12th Roundtable on Financing Water on the topic Unlocking Capital Markets for Water, Leveraging Bond Finance to Invest in Water Security. First of all, thanks to all of you for joining us today in Jeddah and online. I'm delighted to be here today for this roundtable and moderating this panel on bond finance. I'm indeed water policy analyst at the OECD. I'm also leading the roundtable on financing water. And I'm thrilled to be in front of such a wide range of players from the public and private sectors, from the water and finance communities, and from all around the world. And also to be in front of such an esteemed group of panelists. Before we get started, please be reminded that the session will be recorded. So I'll start with a few introductory remarks that I take from the background paper we drafted on bond finance for water to inform the roundtable discussion. So the first thing I'd like to say is that bond finance represents a significant potential for mobilizing capital to support sustainable water investment at scale. The first reason for that is that bond finance is gaining prominence globally. The global annual bond market is estimated at $25 trillion. The green, social, and sustainable bond market is estimated at a bit more than $1 trillion in 2024. And beyond this question of volume of capital available, which is increasing, a bond also represents an opportunity for water investment because of its ability to mobilize capital from a broad investor base, attracting a wide range of investors, and also because of medium to long-term maturities, which is actually well aligned in principle with water investment. Despite this steady growth and its alignment in principle with water investment, the share of water in bond finance is very low. If we look at data, including from the Climate Bonds Initiative, be it looking at original labels or use of proceeds, we see that the share of water in green, social, and sustainable bonds is very low. And the share of green bonds is itself very low compared to the global bond market. We see that it's a kind of a paradox that we want to explore today during this panel, understand what are the main barriers to scale up bond finance for water and how to overcome them. So in terms of barriers, we identify issues such as difficulties in clearly tracking the allocation of proceeds in multi-label bonds, consequent limited visibility to investments supporting water and related subsectors, investor concerns about revenue stability, complex regulatory environments, and underdeveloped local capital markets in many developing countries. So the question we would like to address with the panelists today for this session include how to unlock the potential of bond finance for water, what strategies are needed to scale bond finance for freshwater investments and water security, what are the most promising types of bonds for water investments, corporate bonds, sovereign, municipal bonds, Sukuk, which is actually the counterpart of bonds in Islamic finance. what are the key challenges and how to overcome them. So let me start by introducing our first speaker, Mr. Mohamed Sharaf. Mohamed is the treasurer of the Islamic Development Bank with over 22 years of experience in global markets, previously serving as lead investment portfolio manager. He currently holds board position at Asma Capital Partners, Bosna Bank International, and IDB Infrastructure Fund II. So Mohamed, while bonds are gaining prominence, investment in water still represents a marginal share of the global bond market, as I just mentioned. How to unlock the potential of bond finance for water?
Hello, yeah. First of all, thank you for having me. I'll take the first bullet, as they say. That's a very, I would say, difficult question and easy question at the same time. I would like to decompose this into three angles. First of all, how much is the blue bonds in the GSSS space? And then we'll move around how we can, increase the share of the blue into the green, social, and sustainability linked market. You've just highlighted right now, the GSS market is around, at this point, while we're talking right now, is around 1.1 trillion. That's a significant increase when it started like 20 years back, where the trend was there. Out of this, I would say green is 65, maybe, or around 65, 70. The rest is sustainability, and sustainability linked probably, on the very low bottom of the percentage. The question comes, how much is blue in that? And I think you've just highlighted that it's not big, but I want to caveat this, that it's not big, yes, but it's increasing. And I've just read the report last week that you've issued. The issuance of blue on the last 2 years have exceeded the last 7 years before. So from 2015 to 2022, we've got around 8 billion issuance of blue. Then comes 23, 24, we issued around 11 billion. Now, if you put this amount compared to the global GSSS market, that's less than 1%. And actually, for many reasons. One of the reasons is we are not that standardized compared to the, I mean, the blue market is not that standardized compared to the green and sustainability. A lot of efforts needs to be done by the regulators as well as the multilaterals, and maybe, I would say regulatory bodies like ECMA, CBI, all of those, they need to put more standardization into this. The second hurdle that we see on the blue is that the impact reporting and the measurements are still very infant compared to the other colors, and that needs to be looked at by a lot of the issuers, and that's sometimes shy away investors from coming compared to other colors like the green. But eventually, what we see is that coming from a low base, the blue at this point of time have a lot of potential. If we just looked at the data, even on the use of proceeds under the green, the water is probably 4%, 4 to 5%, and that's a very, I would say, low percentage. The point also as well, we are not able to track whether the water is it fresh water or it's ocean, cleaning or biodiversity. That's something that also needs to be tracked. So I would say if we want to increase this, because we see the bond market is really fitting into this mandate, especially on the water side. First of all, I'm talking as a banker, the duration really fits, because normally the water projects really needs around medium to long term, and that's really is the case for the bond compared to other medium of finance. I would say the second, that it is more diversified. So it's not like a unilateral lender. So it's more like a syndicated lending, which can help a lot to attract more investors. So I would say, if I'm going to sum this up, yes, it's increasing. It's not increasing by the pace of the GSSS. That needs to be taken into consideration. The hurdles related to impact reporting, investor awareness is very important. The last point that I want to maybe a surprise. Normally, water is a issue, especially when we talk about fresh water, maybe as well ocean cleaning and some of the projects that there. This is a South agenda. Green is on the other lateral is probably, I would say developed market agenda. So I think the South institutions need really to start pushing this. We've tried as Islamic Development Bank, as you understand, we've issued green before we issued sustainability. On the last 2 years, we've issued the guidance notes with ECMA and London Stock Exchange about, how to issue GSS Sukuk. Part of it was related to the water use of proceeds. And I think there are a lot need to be pushed by the regulators and even by the national authorities. If your question coming out very important, who should take the lead? Normally, what we've seen on the GSS market, and I'm talking here about green and sustainability, I'm not talking about sustainability linked. Sovereigns always start to, pave the way. As sovereigns gets in, we see a lot of mobilization coming out from the corporate and the municipality sectors. So I would categorize FI sectors out of that at that point of time because, that's not, probably typical to their mandate. Sometimes they can do it, but it's not what we see. What we see, sovereign starts, corporate, municipality follow on that. Thank you.
Thank you very much. It was very rich and insightful. So in particular, you highlighted the role for regulators and MDBs in standardizing the blue bonds and water bonds. The issue of measuring investments that actually go to water from the bond market, because they are multi-label, because you can look at original labels, use of proceeds, you have different share if you look at this data. And this can make investors shy away actually from water investments. So thank you very much for these remarks. Now I'd like to move on to our online speaker. I see her on the screen, Madam Irina Velieva. Irina is a director in Sustainable Finance team in Europe, the Middle East and Africa, based in Stockholm, Sweden. She's leading the team of analysts that provided second-party opinions on green, social, sustainable, and sustainability-linked financial instruments for the issuers located in Europe, Middle East, and Africa. So about this question of tracking investments going to water from bonds, Irina, what's in it for an issuer to issue a bond with a reference to blue or water in its original labels, use of proceeds, or KPIs? Does it allow to access different investor pools, better conditions in terms of rates and maturity? Thank you in advance, Irina, if you can hear us.
Yes, I can hear you. Thank you. Can you hear me?
Yes, we can.
Thanks a lot. Thanks a lot. So first of all, thanks a lot for inviting me to speak at this panel. It's a pleasure to be here. And to address your question, I think first of all, I would like to mention that issuing a labeled debt instrument to invest in water-related project is really a natural solution because these projects are unique in a way that they are providing strong environmental benefits, addressing water quality issues, and they have also very pronounced social co-benefits as they provide access to fresh water, which is a hot topic specifically in Middle East due to it being a water scarce region with the growing population. Therefore, there could be several options on the table for the issuer to issue a labeled debt. It could be labeled as green or as blue, which is a subset of green according to ICMA principles, or it could be also labeled as a social bond, or it could be labeled as sustainability linked, which is a general purpose financing with the KPIs related to water. So for sustainability linked, I would agree, maybe for now we should leave it off the table because there are a lot of questions around the credibility of these instruments on the market in general, but use of proceeds bond could be really a good solution to attract investments in water. Secondly, what I would like to to highlight is that so far what we have seen in the Middle East specifically is that the preference has been to label this type of instruments as green rather than blue, and I think it is linked to standardization, as already mentioned, because green bond instruments are really dominant on the market. They are very much standardized, and in terms of investor confidence, they are probably the best labeled instruments that could be issued at the moment. And also the question of obtaining better financing conditions through greenium is much more studied than, for instance, the question of blue premium when issuing blue bond. However, blue bond can be another option to finance this type of projects. As we understand, IFC guidelines for blue finance are allowing to raise the debt to finance the projects that are related to fresh water. However, the blue bonds as instruments, they are less, investors are less familiar with this instrument, and it is less standardized, and it is often perceived as an instrument to finance the projects related to ocean and marine protection. And finally, what I wanted to mention is that the choice for the issuer, there is no one-size-fits-all solution, so the choice can be often contextual and would depend on the specificity of the project, also on the investor base the issuer is targeting, and on the structure of the deal, be it a traditional bond or a sukuk bond or a bond with various credit enhancements, and it would also depend on the market conditions. So I think blue bonds could be a good option in terms of gaining visibility and attracting thematic and specialized investor. But what we are seeing at the market now is that if there is an option to raise label debt, it is more for green use of proceeds instruments.
Thank you, Irina. So we hear from you that actually bonds finance going to water is often labeled green bonds and not blue bonds due to standardization, because green bonds is the best label instrument that can be issued on the market. So then the question is how to track investments that are going to water, but most importantly, how to increase the share of bond finance going to the share of green bonds going to water. If we don't want to create a category of water bond, or if we don't necessarily push for more blue bonds, how to make sure that more investments from green bonds are actually financing water. And that's potentially one of the key questions. But let me now move to Madame Dina Kasraoui. Dina is head of company engagement and sustainability at BNP Paribas for the Middle East and Africa. As part of her work, she oversees sustainable finance and innovative solutions for the region. Previously, she worked with the World Bank, regional MDBs, and the regional sovereign wealth fund on issues of development economics. Dina, what are the key challenges and opportunities in scaling up bond finance for water, in your opinion, including green bonds, finance for water, and what type of bonds should particularly be scaled up for water investment, and how we heard previously from Mohammed that corporate and municipal bonds are particularly promising. Do you agree with this?
Thank you very much, and thank you very much to the Islamic Development Bank, the OECD, and all the partners for this important roundtable. I think I've heard it from several people today that today's a bit different because we've gone from talking only about water to talking about financing water. And I think this is a critical part, and it means that the time is now. And so I'm very pleased to be here with you. We've also heard from I echo several of the other speakers that SDG 6 has not gotten as much investment as the others due to lots of different reasons, mainly about the guidelines that were not as developed as in green bonds and in energy and in other ones. but also because of lack of investor awareness and also the need for more governance. I think these are the main challenges that we see. Addressing the global water challenge is fairly complex and requires significant upfront investment. There's also a requirement for partnerships with governments, whether it's federal, local, municipal. There's a requirement for governance to ensure delivery and impact measurements. And these are all things that don't come easy, and they have to be worked on together. There needs to be political will. So we see this as one of the perceived challenges, but also as one of the perceived opportunities. We like challenges at BNP Paribas. The impact needed relates to things like social equity and public good. These are words that are very important, and they are key to many of the investors that we see. There may be some regulatory uncertainties and environmental issues, but these are also opportunities as well as challenges. We also see that there's a need to kickstart the blue bond, the investments in blue bonds. How do you move from the dialogue, the conversation, the challenges, and the planning to actually the motivation to take a leap? And yes, as Sharaf said, there has been an increase, a significant increase in the last 2 years in blue bonds, but not enough. I think this is due mainly to the clarification of the ICMA guidelines. Those were very needed. There was a lot done with the green bonds, and there was an investment and a kickstart from the entities like the MDBs, like the World Bank. And we've seen the green bond market standardized, not just in green bonds, but also in green sukuk. It's people know what it is, they understand it, the use of proceeds, and we need to see the same happen in the blue market. So we need to see the same virtuous cycle. There needs to be a level of innovation in sustainability to unlock the value. One of the topics that my colleagues and I have been talking to a lot of MDBs and partners about is blended finance. Blended finance is a key form of finance that brings in the private sector, the public sector, and the MDBs, and also measures impact. It's not easy to structure them. There are things like impact bonds and outcome bonds. They've been far and few and far between. And, you know, we would all recognize the Ecuador Galapagos bond or the Gabon bond or the Rhino bond. That's how rare they are. We all know what their names. These are the successful ones, debt for nature swaps. I know that we're working with the World Bank on the Indonesia Coral Bond as well. So there is momentum. Investors are interested. We do see investor interest. They're mainly pension funds and institutional investors. But we need more awareness. We need the governance, the market development, and we need the political will and institutions to bring this together. And this, I mean, it's going to come down to institutions like the Islamic Development Bank, like other MDBs, to bring all this together and bring in philanthropic institutions and corporates. It's a whole community affair. The projects have to be very well defined, and I think this is also one of the challenges. And there have to be clear metrics, identifiable, and a verifier, and these are very difficult sometimes to put together. This difficulty is something that you probably saw, we all saw in the beginning of the green bond market, but as you work on more of them, the scalability will happen. So let's not see that as something to hold us back. The bond investors will come, the sukuk investors will come, and I personally believe that this will bring a new type of investors to the sukuk market, and also a new type of investor to the blue market. It will be a virtuous cycle. Outcome bonds are important for climate change mitigation, for adaptation, and for the future of our planet. So I will leave it as here, and we'll carry on.
Thank you very much, Dina. So yes, there is a clear lack of investor awareness towards the potential of bonds for water, but you're saying that there's actually a momentum. Blue bonds are rising, but not enough because there is new guidelines and they need to be strengthened. They need to be standardized. And also blue bonds in our mind now, it still resonates a lot with ocean investment and how can it actually be used for freshwater investment, water security? And with this, I'll now move on to our next speaker, who is Mr. Franz Roras. He's Director of Water and Sanitation Analysis at CAF Development Bank of Latin America and the Caribbean. He's also chair of the task force on financing, on water financing of the World Water Council. So, Franz, how to leverage bond finance for freshwater investment, and what roles government and public development banks do or should play. And there is a presentation, so you can start. I can give you, as you want, actually.
Hello. Well, thank you very much, the OECD and the Islamic Development Bank, for this kind invitation. My intervention is going to be based in two messages. The first one, what we're doing as part of the World Water Council that comprises many organizations, as you have seen. And we have heard this morning the different discussions about the bankability projects. So what we are doing first, before going into the bonds precisely, is to open a discussion and try to shift from the understanding of bankability projects into sustainable and resilient projects, because we understand that when we refer to bankability, it's close related to risk-return ratio, and we understand that it depends on the typology of investors. It's not the same for philanthropies, it's not the same for climate funds, it's not the same for multilateral development banks, it's not the same for private investors. And it also depends on the type of or the typology of projects and also the phase of the project. So we are proposing to have a broader discussion about a better understanding of what means sustainable and resilient projects. This was the first one. But the second one, and it's now related to the bonds, is an operation that we have been working as CAF, the Development Bank of Latin America and Central America, and it's a swap, a debt conversion that combines different instruments, including bonds, and that's why this is presentation. We think that this type of instruments could be interesting in highly indebted countries. And after COVID, we know that countries are facing a lot of fiscal constraints, so it would be interesting for highly indebted countries like this. In this case, in Central America, we have a country that has wanted to repurchase $1 billion, and they try to identify how to get a swap conversion, and it was the first ever debt conversion for fresh water, because we have seen in the past that there have been swaps for blue economy or for oceans, like in Barbados and Belize, but not for fresh water, I mean for watersheds. So what we have done, and that's why, and apologies for the presentation, I know it was not allowed, is that in this case, the government of El Salvador wanted to issue bonds, and it was the primary idea to issue bonds, and then they created an SPV, but they were rated as CAA1, and then with a credit enhancement from CAF with a guarantee cost, an insurance cost, a political insurance cost from DFC, the bonds they were planning to issue enhanced to a credit rating of AA2. So this increase in notches that we call coming from CA to AA was very expected for the investors, and then at the end we decided, they decided a bank to provide a loan, but it could be bond investors to get that, and based on that loan, the government of El Salvador was able to repurchase the debt. in this operation that was $1 billion, they got savings of around $300 million, sorry. And this $300 million, based on this guarantee, SBLC, standard by letter credit amount from CAF and the performance risk insurance from DFC, allowed to create a program that will be oriented to address different necessities and in a watershed that is very important for El Salvador. In this case, with this $350 million, El Salvador is going to be able to have different programs, including improving water quality and watershed health, restore biodiversity, improve management and water use efficiency, and others, as you can see. So this is the way we think would be interesting, because we are combining different instruments, as you can see, guarantees, insurance, but also the potentiality to bond issue. In this case was a loan, but could be also applicable to bonds, and then to try to repurchase the debt and oriented or to be addressed into water conservation programs for fresh water. So this is one of the examples we wanted to share with you. Thank you very much.
Thank you, Hans. So this debt for freshwater instrument is not exactly a bond instrument, but actually it brings a lot of lessons learned for bond finance for water, in particular how to how to attract more investors with credit enhancement mechanisms and innovative instruments, and specifically the role of DFIs such as the CAF and the US Development Finance Corporation to bring this credit enhancements and to improve the risk profile of the investment. So thank you very much for that. Now I'll invite Dr. Maya Pusparaman. Dr. Maya was in fund management for 10 years, managing equity and fixed income instruments, including Sukuk, before transitioning into academia. Dr. Maya, how can Sukuk, which is actually the counterpart of bonds in Islamic finance, be leveraged for investment in water security? And how does the asset-backed and asset-based nature of Sukuk impact the risk profile of investment? It's a bit technical, this question, but the idea is just that Sukuk is not a debt instrument. It's more like a ownership over an asset. And so, Dr. Maya, please, you have the floor.
بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه أجمعين. Thank you so much, Ms. Chairperson. Alhamdulillah, I'm very glad to be here. We have the opportunity to be meeting here with all of the experts in water financing and water per se. I think we have a very engaging session earlier, the second session with regards to Sukuk. If I may recap, the definition of Sukuk is basically a certificate of investment that provides the Sukuk holder the rights of certain ownership of the certain particular asset and a profit over a certain period of time. Tapping into or leveraging into Sukuk for financing the water specifically, like what we have actually been told this morning, is still very, very new. Although in Malaysia, we have basically highlighted some of the institutions that have issued Sukuk earlier, which is related to water and whatnot. But for example, Air Selangor, we also have earlier issuance by one of the companies that is also related with water 10 years back, but it is also has been matured. And also one of the issuers that we have is a short note, Islamic medium-term notes by one of the water institution. But I think one of the challenges is that the categorization of this earlier Sukuk that has been issued is more of SRI Sukuk rather than specifically being issued, categorized as water related Sukuk. So that could be further enhanced, I believe. I do also would like to recall on what Mr. Sharaf has actually highlighted earlier, that sovereign, Sukuk would be the one that could lead. It is also being highlighted by Mustafa earlier that that could also be one of the flagships, in terms of enriching the Sukuk issuance for the water financing. If I may highlight some of the statistics with regards to sovereign sukuk. We have the Egypt debut of 1.5 billion that has been attracting bids of more than 6 billion in 2023. So that's basically provides the stronger demand of sovereign sukuk. If you could recall, Pakistan, who issued sukuk in 2022, also has been oversubscribed by more than 2 times. And that is also similar case with UAE in its first domestic sukuk that has been oversubscribed more than 7 times. Nigeria also, when they issued sukuk, sovereign sukuk in 2021, has also received bids more than 3 times of its value. So we can see that the demand, particularly for sovereign sukuk, is actually very high, and this could also be a way to actually tap in terms of financing water and whatnot. But of course, later when we have more issuance from corporates, and also from municipal, like what Mr. Sharaf has actually highlighted. Another thing that I would also like to highlight is that the challenges is with regards to pricing incentives for the issuers. They have to basically manage the cost management versus the prevailing market rate. Some of the tax incentives that could be provided to the issuers. And also because identifying the water asset is quite challenging. And that is where we can actually classify whether it's going to be asset-backed sukuk or asset-based sukuk, because asset-backed sukuk would be the return is generated from the asset itself, as opposed to asset-based, where you can use other structure and the return may not come from the asset itself. So that could be ways that we could basically average on Islamic finance, particularly on sukuk. But I must also say that with 940 billion of outstanding sukuk as of now, it is not something that is particularly new on financing development, but it's just that we're going to have to rebrand it and refocusing it, particularly on water specifically.
Thank you, Dr. Maya. So actually, we hear from you that sukuk is kind of the same story as bonds. It has a very strong potential for water, but it's widely underutilized. So that's the richness of having today and tomorrow a roundtable about Islamic finance and also conventional finance, because there are a lot of synergies, common challenges, and we could see how to explore these synergies. You said that sukuk that are invested in water are sometimes classified as SRI sukuk and not water sukuk. So which brings us again to this question, should we classify bonds and sukuk as water or not? And if not, how to increase the share of investment going to water from SRI sukuk or from green bonds? So thank you for all the panelists for this intervention. I have a follow-up question because I hear from all your interventions that actually a key issue is actually how to increase investor awareness of water, like how to attract more investors, how to attract more issuers to issue bonds with a mention to water in their original labels or use of proceeds. So how to attract investor awareness, how to attract more investors and issuers to actually invest in water through bonds.
I think that's the $1 billion question. Let us be very frank. So all the panels agrees that when we talk about label, the green mark or maybe the green, labeled sukuk or even bond have already taken its trajectory until reach this kind of standardization. and that the investors become very comfy with the, I would say, the reporting out of that. That's took, a number of years. Unless this is what we start to, make the investors very comfortable by the amount of reporting and the KPIs that is, generated out of those sukuk, especially for thematic investors, we will not see this market grow, because eventually issuers will start to, as we've just highlighted, to go under the green and use the use of proceed, as an allocation. Now, very fundamental question here, who should start this? I mean, we understand that if we're talking about freshwater, SDG 6, which we probably talk about, this needs to come from the south. So eventually, mostly sovereigns or even, other issuers will start to be from the south or even from the developed market. But who are the investors as well? Does the investors comes from the south or from the west? That's another question that needs to be answered. But rather than answering those questions right now, I think there needs to be a push on the regularity issues. The standardization is a key. Green took some time. I think ECMA also principles played a very important part in making sure that the market are very standardized, and there is, a benchmark of what is the green, and to avoid any greenwashing and to make sure that the green premium are there. Now, I think that's the starting point: regularity, impact reporting, how we are making sure that we are reporting in very, I would say, transparent or clearest manner. Once these investors will start to be around, and then issuer can start, So I think the groundwork needs to be on the regulation and the standardization side.
Yeah, I fully agree with that the regulation is key, standardization is key, but I also believe that to mitigate risk, public and philanthropic funds can absorb the initial losses, provide the guarantees, and make projects more appealing. Just like in the green bond market or the green sukuk market, success breeds success. You need to have one after the other, learn from the one before. And I think success will bring success. Investor awareness will come with these transactions, with the impact, with the ICMA guidelines, with the strengthening. And also you do need the sovereigns, you need the multilateral development funds, you need that political will. And taking the leap, there is that aspect, you have to take the leap. But it will come around, and then you'll come to that tipping point where we will no longer be having this conversation, but we'll be talking about the specific projects. Right now, we say the projects are difficult, they need to be specific, you need to have the impact, but how do you get all that done if it doesn't start somewhere?
Yeah, thank you. I think when I listen to the blue bonds or the green bonds, I think the discussion is broader in terms of what we understand of blue economy or a green economy. And I think it goes down because we have seen that depending on different institutions, blue economy covers water, fresh water, and others, it's only focused on ocean. So I think the confusion perhaps comes in an upper, and not only in the definition of bonds, but on the blue economy and green economy. But independently of that, and perhaps trying to solve that problem with the sustainability bonds, that could be a mix of different, including social bonds. What I think it's important is how to increase investment in terms of bonds, and it requires an enabling environment, as you have said, and most of the panelists have said. But it's not just the word enabling environment, what it means. It means governance, it means political will, it means adequate incentives. And as the example I have presented, that perhaps it's a combination. If you want to reduce risks, perhaps we have to provide good incentives for, in this case, for bondholders. And incentives could be providing the government adequate warranties or insurances. So, and then it's the role of the public sector, or perhaps the MFIs that are supporting the public sector, in order to provide this type of incentives to make bonds more attractive, to reduce risks. Because at the end, bondholders are looking for better returns, reducing risks, And if we don't give that signals of reducing risks with adequate instruments, it's going to be harder to increase bonds.
Thank you. So you mentioned the role of the public sector. They actually can be issuers, so they can issue sovereign bonds. But then what you are saying, Mohamed, is that who will be the investors? If the public sector issue bonds through sovereign bonds, then how to attract investors? And the role of the public sector can be here, providing credit enhancement mechanism as you presented, France. I'd like to ask the question of municipal bonds, because we hear about it more and more, and its potential for water. Municipal bonds, you mentioned also earlier the potential of corporate bonds. Could some of you elaborate a bit about specific types of bond, municipal or corporate bonds? Sorry? Sorry, Irina, maybe you want to react?
Yes, thank you. So I think if we think about specific types of bonds, it would really depend on the project and on the specific need from the location and from the region. But just to react also a bit on the broader discussion we're having here, and I also see some questions in the chat related to like what's driving investors away from the water and why these investments are not really receiving the uptake. So I think there are, in terms of the risks that investors may face while investing in water projects, there are two layers of risks. First, related to traditional financial risks and credit risks, and this is where blended finance could play a role, or additional credit enhancements or guarantees could play a role. And the example of El Salvador we've seen just now, I think, is a beautiful example of how credit risk for investors could be mitigated. So that's very important. And the second layer of risks are really the environmental risks associated with water-related projects. And this is where standardization and local taxonomies could help a lot to boost investors' confidence and really facilitate the investments related to water.
Thank you, Irina, for recalling that we also have online participants who are asking questions, and I was about to come to that. So you mentioned one question. There is another one, which is around how SDGs are actually drivers and indicators of financing through bonds, specifically SDG 14, but I would like to add to that SDG 6. I don't know if one of the speakers would like to react to that question. And if not, I can also open the floor to questions or comments from the audience here in Jeddah. If you have questions, comments for esteemed panelists. And I see in the meantime that an online question came. So from Katarina Fonseca, so far we are talking about instruments and investments in the sector for more than several $1 million, bonds, debt swaps, but many municipalities and utilities are looking for less than $1 million investment. There is a real gap in the finance offer and instrument for this client group. Where could we see smaller but steady improvement, which would also diminish the risk profile in the sector? Any thoughts from the panel? And you could also react to a previous question.
I know the size really matters when we get to the capital markets, but actually, I don't think that you know a debut blue would be $1 billion deal at that point of time. And that's what because eventually, and I'm talking over with a banker view, if you're issuing, you want your book to be oversubscribed. So that's relates to the question here. If we're talking about, $1 million in a municipality, or, that can be very much fraction if you're issuing 200 or 150, I think the how you're allocating is not the issue. I think also on the other side, I think banks, when we talk about community banks and, where we see a lot happening in terms of financing energy efficiency and, a lot of on the retail side or even on the corporate side, I think this is also an area that eventually are not even explored. But just to make sure that, the sizes of the project itself, when we're coming to this, can be much allocated with a bigger deal on the more market and then allocated over, let's say, 100 projects or 120 projects. That's what, the second is what we call the community banks and, municipality banks that can, really issue this and eventually distribute it into a lot of projects, maybe on the ground. So that's from my side.
Yes, Dr. Maya.
If I may also add into that, I think the meeting the investors' expectation is also essential, because when we talk about previously when we talk about green sukuk, right? We basically emphasize on having returns that would commensurate with risks and sustainability. So and when we talk about water per se, again, the awareness is of course important, because it's particularly a new area, I would say, for sukuk, perhaps not for bond, even though bond financing is also quite relatively small. That is where I suppose research and innovation would have to take place. Research institutions, they would have to basically work hand in hand with the issuers, with the industry partners and whatnot, so that we'll be able to actually increase the awareness and be able to provide more information with regards to what needs to be tackled, particularly in terms of the challenges that we highlighted on pricing incentives, and whatnot.
Thank you very much. And I hear that Madam Irina would like also to react to that.
Yes, I think that's a very good question that has been raised in the chat. And just to share the experience of what we are seeing in the region, frequently water desalination and wastewater treatment is a category for in the green frameworks, which is included in the green frameworks of financial institutions, of banks. And what they commit to do is actually raise the bond and channel it to the in the form of a loan to the utility companies and to their potential lenders. So actually what we are discussing now and the statistics we are sharing is on the bond market, but let's not forget there is also a big chunk of funding which is coming from the sustainable and sustainable loans market. So for smaller projects, one of the options could be obtaining a bank financing through green or blue loans. And what is helping here as well is that many banks now have their own sustainability targets and the target ratio of green lending in their own portfolios. So therefore, it could make this smaller financing more accessible to wider range of companies that will not go to the open market, but borrow on a bilateral from the commercial bank.
Thank you, Irina. I now have another question online, and I have two questions also here in Jeddah. So online question is from Sirafun. With regards to increasing investor confidence and decreasing risk associated with water-related projects, especially with regard to guarantees, how could we go about this for non-sovereign regional water entities like river basin organizations? And I can also, so if you can note this question, and I will directly take the question in the room. So I think I see 3 questions there. From like 4 questions, 3 at the back and 1 at the front. So please go ahead.
Hi, My name is Stephen Ferghese from the International Water Management Institute. And my question is, how are nationally determined contributions and national adaptation plans driving capital flows? And how is the private sector involved in this change in capital flows coming from those plans? Is it private sector or predominantly multilateral development banks, development finance institutions, climate funds? Where is it coming from?
Thank you for this great question. Yes.
Yes,
gentlemen.
thank you. What we're facing in sub-Saharan Africa is that when we try to set up green bonds, that at the same time, there's not so much appetite because as well of the business case. So for example, if you want a green bond for public water utilities, where a lot of the water utilities have an revenue water of 40–50%, sometimes even more. It could work perhaps if at the same time the banks also invest in smaller PPPs to solve this non-revenue water issue to create more comfort for the bond. I was wondering if there's any experience in the room or from the panel where this double-sided approach has been used or has been tried. Thank you.
Thank you very much. And yes, please.
My question is about the future of sustainable investments. A couple of years ago, even during the times of COVID, the green growth was taking over. Sustainable investment was the only rising trend. Now there is suspicion that there will be an ESG backlash initiated by the United States, and now we're witnessing the European Union omnibus. So do you see sustainable investment is something that's there to grow?
Thanks a lot. And the final question from Sophie here in the room. Can you please give her a mic, or should I give my mic? Okay.
Yeah, my question was more a little bit of a challenge for Mohammed, because you mentioned that blue bonds are of a south and green bonds of, more of a developed issues. But in fact, some of the largest blue bond issuance or bond issuance for water have come from the, Dutch government or from companies such as Anglian Water, etc. So do you think that we could change that perception, perhaps, and see more landmark issuance coming from big issuers in the north, so that we can shift away from that perception that water is a southern issue, when we can see that water-related risks are rising everywhere, including in developed countries?
Thanks a lot for this very interesting question. So, question about how NDCs actually drive capital flows, question about investor confidence that come from online, question on, is there a future for sustainable finance in the current global context? The question about issuing green and blue bonds for South versus North. A lot of extremely interesting questions, so I'll let you react as you want, dear panelists.
I'll start with the last question because that's directly to me. Indeed, I agree with you, but eventually we need here to define water. What is water? Is it fresh water? Or we're talking about ocean cleaning and, a bit of link to biodiversity. And eventually access to water, we cannot deny this. That's in Africa. Yeah, I'm talking about access to clean water and many of the South countries. And I'm not trying to direct the conversation into any political angle, but if you see the rise of green, which is pushed by a lot of thematic investors coming out from the developed world. But while we're seeing on the blue side, and when we specifically talked about access to clean water, we don't see the same appetite. That's number one. Number two, if you see the regulators setting bodies, if you're talking about the ECMA or CBI, I think the whole, I would say, dynamics and the ecosystem was pushing around the green, which is something that we really like. And actually, I issued green, we issued as a green and sustainability. So that's not something that we mutually exclusive, but I'm just trying to, if we really as an analyst try to decompose why the blue market is, or the blue bond are not picking up at the same pace, then there must be a reason for that. Because if we're talking about access to fresh water, to clean water, in many of countries in the South, that's something that we really need. So I'm not just trying to infringe anything here, but I think issuers from the region needs to step up. I think we need to start mobilizing investors. Investors will come not only by credit enhancement techniques. I tend to differ. I think the mechanics of the capital market itself need to be working to ensure that there's sustainability. Maybe, as Dina has just highlighted, we start with an outcome, or I would say linked, sustainability linked, maybe, or impact. But that does not drive the industry if we're talking about blue issuance. Same like the green. Green now becomes a part of our life, right? So everyone is issuing green because eventually the underlying is green. That's related to the second question that I got, which is maybe all of us. I think sustainability is now here to stay. Eventually, the way we do business, the way we finance things, becomes a part of our DNA, maybe as a multilateral, but also a lot of banks. And it becomes something universal that is adopted beyond, one country or other country. I think that's already being diffused into the way we're doing business. I think it's very tough that we go backward, something that we, already have achieved a lot. So I don't think maybe the pace might be slow, yes, but ESG and sustainability, our view, maybe because I come from a multilateral, are here to stay. So that's for myself.
Thank you very much. I wanted to answer the question about the NDCs, and it's a very good question. If the conversation about water, the dialogue, the water financing is not part of the NDCs, then that might create a gap in confidence. They have to be related. Each country needs to ensure that these conversations, the dialogue with the multilaterals, with their investors, with the other entities are part of it. This is part of building the confidence, part of building the investor awareness, and part of getting to the governance. If they're not linked, then that gap does not help provide that level of confidence to the market. Thank you.
In my case, I would like to react on some of the questions. And one was referring to the sovereign loans or non-sovereign loans. I think the financing is also evolving. And for instance, in our case, I cannot generalize, but in our case, at CAF, we have started because it was a mandate of the shareholders to increase our loans to non-sovereign loans. I mean, to subnational governments and also to public utilities, including public water utilities. So it was a mandate from our shareholders, and now we have been increasing with these non-sovereign loans to states or municipalities or public funds. So I think it depends on the political will, in this case of the shareholders of the institution, including the MFIs. Regarding the scale and aggregation, yeah, I think there are interesting cases, but one could be that we have seen in some multilateral development banks are looking for aggregation in different countries or seats in order to create this scale, on one hand. And in the other, we have seen that there are also an interesting partnership with regional development banks that perhaps have smaller tickets. That's what we found in the Caribbean, for instance, and we have been starting some discussions with Caribbean regional banks in order to see, because they have smaller tickets, and in order to combine and see how it works. And regarding the question of performance-based contract, yes, I think there are different examples. Some performance-based extraordinary with no investment, some others with seed investment, and some others with investment. So I think, for instance, in Latin America, we have 3-4 examples, and perhaps are more in the world. So this would be my reactions of some of the questions that came. Thank you.
Thank you very much. Yes, Maya?
Yes, I think I'd like to just react on the investors' confidence. We all agree that investors' confidence cannot be developed overnight. Yeah, it takes time. So particularly with water, because the perception is that the return is relatively low and it is being associated with public goods and whatnot. But if I may just quote the case of Sukuk that has been issued by Air Selangor of its different tranches and whatnot. So it could be meeting certain investors' expectation because the returns is somewhere between 4.17% to 5.35%, and with different tenure from 10 years up to 25 years. So it basically be able to actually meet a certain investors' expectation. But of course, when we want to strengthen investors' confidence, it has to be coming from the regulator side and perhaps having some sort of guarantees. That would also strengthen the investors' confidence in consideration that investment into water is relatively new at this juncture, particularly for Sukuk as well.
Thanks a lot. And Irina, would you like to react to the five, like one of the 5 questions we had from the audience here?
Yes, thank you. I think I can react on the question related to sustainable debt market overall. So, and given what is happening in the US and potential drawback on the market, I think so. Our expectation this year that the issuance volumes are likely to remain the same as in 2024, about $1 trillion. So remaining stable. And if we look back for the last couple of years, the proportion of labeled debt in the total issuance volumes is also remaining constant at around 13–40% of the total global issuance. And several factors that could contribute to that. First of all, in a lot of markets, we're hearing that there is a long-term commitment from market participants, from sovereigns, multilateral financial institutions, and also issuers to address the climate change and to proceed with the energy transition. And therefore, we expect that despite the political headwinds, investments in renewable energy will continue, and this will be, many of them will be labeled as green. And that will support sustainable debt market. And second trend that we are seeing is that there is a lot of questions and interest in investing in transition bonds and financing transition activities, and this could also support the issuance. And finally, in 2025, a lot of green bonds are coming to maturity, and we expect them to be refinanced because it's a well-standardized market. And again, the economic incentives and the ability of the issuers to obtain cheaper funding and better funding conditions because of the greenium is still there. So I would not say it's dead. I think it would be stable in 2025.
Very interesting. Thank you very much for this optimistic vision. Sorry, it's very reassuring to hear. Are there any more questions from the floor here in Jeddah online? And if not, I'd like to give the opportunity to all our panelists to say a final word of conclusion before wrapping up. Yeah. If you have one message you'd like us to keep in mind.
I think that the only message is that, I'm very optimistic even about, while we're seeing the scale is not increasing of blue label bond or even Sukuk. I think the traction will start, on the next 2–3 years, that we see more issuances to the market. The only caveat is, Dina has just highlighted, a lot of work needs to start, the ecosystem needs to act, and if this is already started, or if I've already been impacted by a lot of the key players in the market, including multilaterals, philanthropic institutions, and even sovereigns, I think the market will be there very soon.
I'd like to echo Sharaf on that one. I think the market is there and the work has to be done. If I can steal Nizar's comment about the football team, this is going to be like a football team. There's going to be a lot of players who have to have trust and confidence in each other and depend on each other. And once you get that going, you will have the virtuous cycle and there will be scalability. I am ambitious and I keep talking to my colleagues, not about one outcome bond, but about a fund of many outcome bonds. But I am quite ambitious and I can see that in the future. But we need to get the team together. We need to get the governance in place and the investor confidence. And I believe it's there.
In our case, we all know that we need to increase substantially the investments in the water sector, depending on the region, 3 times, 4 times the current investment. So I think that there's also a great opportunity, but it requires the action of a broader partners, not only in the water sector. As Henk mentioned this morning, I think we need to look also in the agricultural sector, in the health sector and others, and also in the financial sector as well as the ministers of finance and the advocacy on that, because we must understand that water is not only a resource, as everybody says, at least in this room, it's a public good and it has a lot of benefits and externalities that sometimes we cannot understand. But if we work on shadow prices, for instance, then we could understand the externalities and the benefits of this. So for that, I think we need to work together and look for partnership and, of course, to exchange. And this type of exchange help us to a better understanding of what the water sector needs. Thank you.
Right. As a researcher and also ex-fund manager, I think research needs to be beefed up, particularly on scope in water financing. And as we speak, we are already, our institute already in talk with IsDB, to basically come up with a framework dedicated on developing for water sector projects and supporting the implementation in the IDP countries. So inshallah, more to come, more awareness to be increased via research and publication, inshallah. Thank you.
Thank you. And Irina?
Yeah, thanks a lot. I feel really inspired by today's discussion. I think the fundamentals are there to for increase of water financing in the region. So for me, the key factors to really make it work is transparency and standardization, and ensuring there is enough investor confidence. First of all, in terms of the credit risks associated with the investment, but also in terms of environmental risks and the potential mitigations.
Thank you very much. So actually, thank you to all the panelists and to all of you. I think this session was extremely rich. We drafted this paper on bond finance for water that you read, but we learned a lot from you. And so we're going to use your input to enrich it and include it in our official publication that is coming in the months to come, so stay tuned. Thank you for your participation. And thank you also for the very interesting questions from the floor and online. I was impressed by the content of this session, so thank you so much to everyone. And now we will start the first side event, but I'm going to let our Master of Ceremony introduce the side event. Thank you.